Guys, Brad Niccum here. Hope you all had a great weekend. I hope you have a great week this week. I can't believe we're outside with snow on the ground. It's kind of crazy. I miss those warm days already. All right, how about a little market stuff? If we look at stocks and bonds today, both lower. The start of the day after our big rally on Thursday, following that cooler than anticipated consumer index inflation report, after seeing a 206 basis points rally on the mortgage bonds, it's natural to see a bit of a pullback. Bonds have already moved a little bit off their worst levels that they were this morning, so that's good news. Something else to help inflation, America's largest retailer, Walmart, has a new message for its suppliers. They said, we are not going to pay higher prices anymore. It has a major implication for both inflation and profit margins. It will lead to relief in inflation and added stress to the vendors' profit margins. Another thing that happened today, Fed Governor Chris Waller spoke today in Sydney. Said that it's good to see the evidence of inflation coming down, but the Fed would need to see continued decline before the Fed thinks to take their foot off of the economic brakes of rate hikes. This caused some sell-off in the market this morning. It appears the Fed wants to keep making the same mistakes they've made. Some Fed members seem to understand that there's a lag from when the Fed hikes to the full impact on the economy. The Fed should try to take into account the cumulative impact of all of their hikes since March. Remember Waller, same Fed member who said he could not see a recession because unemployment rate was so low at 3.5. It's since gone to 3.7%, but he fails to see throughout history in every market cycle, we get recessions when unemployment reaches its lowest point and turns higher, not when unemployment is elevated. We actually know that the labor market is a very much a lagging indicator. We also know there's some major layoffs coming in the tech industry. Twitter, Facebook, Snap, Shopify, Netflix, and many more are saying they're going to lay off people, thousands of people. So those are huge layoffs, and those are going to show up in several unemployment reports in the future. It sounds scary to talk about all this unemployment, but remember, unemployment and inflation going down makes interest rates go down. So, it's kind of weird on the mortgage side when we see that inflation report come down, we're excited, and we see unemployment go up, we're excited. We do have a busy week, so we'll have to see what bonds do, to see what interest rates do to us this week. Tuesday, we do get the Producer Performance Index. Wednesday, we get mortgage apps, retail sales, and the housing market index. Thursday, we get housing starts and permits and initial job claims. And Friday, we get existing homes. So we'll have to pay attention to all of those reports and what the market does to see how those affect rates. Let's hope they continue to either stay where they're at right now or get a little better. Some good news, mortgage loan delinquency dropped to 3.45% of outstanding loans in quarter three. Once again, that breaks another lowest record point since 1979. If you look at the third quarter of 2007, mortgage delinquencies were at 18.1%. That's a huge difference from where we are today at 3.45. So that's for all the people that think this recession is going to be like 2008 and we're going to have thousands of foreclosures and people losing their homes and the market dropping. It's just proof this is a very different recession and a very different time, especially with all the equity that people have in their homes. So that's kind of it for all the market. Remember, we're still 24-hour underwriting time, 24-hour condition clearing. We're still closing all loan types in less than 30 days. I got a deal right now with an appraisal waiver that will probably close inside of 10 days. If you want to find out how to get an appraisal waiver before you put an offer in, call me. It really helps in those multiple offer situations, which I know a lot of people think are gone, but they're still happening. I had 5 people not win on their purchase agreement this weekend, and most of them did full price offers. So still getting pre-approvals done 7 days a week. Still getting them done in about an hour. So if you've got somebody that needs pre-approved, give me a call anytime. 317-538-9825. Look forward to talking to you and seeing you this week. Have a great day.